All right. Good morning, everybody. It is NVIDIA's earnings week. It's very likely one of the biggest events we're going to have. Um, the expectation at the end of last week was that we would go sideways into NVIDIA's earnings this week, but we're already seeing some discussions about NVIDIA hitting in the last 24 hours. They have a chip called the Blackwell. And in their last earnings, there was delays over this chip. Now they're talking about potential problems again with this chip. We've all been looking for the earnings where NVIDIA finally misses. And even if they don't miss, if they don't beat enough, it's likely we're going to see a reaction. So they don't have to just toe the line. They've got to get so far over the line as to appease the appetites and to make it worth an investor's time with them already so extended. So if we don't hold the line today and we don't hold the line into NVIDIA's earnings, it's likely going to be because the market starts to anticipate what's going to happen to the market if NVIDIA doesn't reach these lofty goals. It's the biggest thing that we have to focus on. Behind that, we've got a lot of data coming out of Europe. We're going to continue to hear about the new cabinet picks for the new administration and the replacement for Janet Yellen. It's kind of a big deal. So this is going to go to sentiment more than anything else, right? We're all guessing and hypothesizing and just guessing what's going to happen when it comes to NVIDIA's earnings. And nobody knows if the cabinet picks are going to make it through the vetting process, and all of it is just going to be sentiment based, which makes it a lot harder to play. And it really shortens our time frame on, when we look down the road and try to anticipate where are we going next. One of the things that I still need to dig a little deeper into is this reserve currency for Bitcoin. Now, there's nations around the world that use Bitcoin as their national currency. And there was some talk that if Trump was elected, there could be some Federal Reserve of Bitcoin. I don't even know what it would take to get that instituted, but it has fueled a lot of the volumes that we've been seeing into the Bitcoin space from around the world. It's bad enough when we got big institutions in the US piling into something, but when you have global institutions piling into something, that's where you see these runaway markets like Bitcoin and its extreme continuations, or even Tesla, which was up again this morning, another 6%. Buckle up, right? So looking at what's going on around the world, Japan is down more than 1.25, while the NASDAQ is up about 1/4, and everything in between. That's a wide range. We don't have agreement on anything today. If everything was down or everything was up, at least we'd have a little bit of edge looking for a rising tide or a falling tide, but all we've got is choppy waves. Lots of Fed speakers, lots of ECB speakers, additional auctions today, some housing data. and a move in precious metals and gold thanks to Goldman Sachs. Their analysts projected that gold would set new records by the end of next year. So sentiment again, right? They didn't put out anything more than just some sweet talk about precious metals, and that's all it took. Gold's trying to, crude is trying to come back up off of the lows this morning too. We got nothing, right? Look around, it's just choppy mess. So we're underneath the zero gamma. We're underneath the volatility trigger and the 10-day moving average. So we've got a lot of things over our head. The 10, the 20, those options lines. We've got 58.92 as a cog line underneath us, really close to this voodoo line. And then we've got Friday's lows. Underneath that, we've got the ADR half. And if we line it up this morning, the ADR half lines up with the 1-day estimated move. I know you can't really see it on the downside here, but that ADR line is tucked in there right with the 1-day estimated move line. Same thing on the other side. We have the 1-day estimated move to the upside. There's the ADR half buried underneath it. 59.32 is a cog line. So if we make a move to the upside, we've got zero gamma to fight, the volatility trigger to fight, the cog line, the 1-day estimated move, and the ADR half. That's a lot of stuff. To the downside, we've got our own Globex low. We've got yesterday's low, and then the 1-day estimated move, which happens to also be the ADR half. They don't always line up so nicely like that, but we'll take it when we can get it. Put wall 58.25, just underneath the 10-week moving average. It's a long ways off. Feels like a long ways off. 5,800, 58.25. The ADR right now is 1.07. So it's continuing to grow because we've started to stretch our days out. This is just a math formula. Looking back over the last month and asking what was the high and the low on average? How far have we run? Well, if you split this in half, let's just round up first to 1.1 instead of 1.07. If you split that in half, it's 0.55. So we're talking about a market that opens in Globex and goes up about 0.5% and then goes down about 0.5%. That makes sense. It's a typical market move. But this has expanded almost 0.25% in the last month or so. I believe as we were getting through the end of October, maybe mid-October, it was 0.9. Somewhere around in there. It's pretty close to as big as we normally see it too. I can't remember the last time this was above 1.10 or 1.11. It's been a long time. But it does kind of highlight the continued persistent volatility that we've been seeing. So no real edge today on one side or the other, trying to anticipate, will we hit the upper edge or the lower edge? At this point, we're just maintaining sideways, waiting on a reason to move. And that's really what it feels like. The market's just looking for an excuse, one direction or the other. And everything this morning that we've been seeing, it's all sentiment based. And that can change things really fast. So we got these anchored VWAP lines that we can mess with. Okay, a weekly anchor, monthly anchor. This blue line is the anchor for the month. So this is November's VWAP, and it's another level that's now over our head. We've got last week's VWAP, which really isn't going to come into play, I think. And of course, the new week is the same as just your one-day VWAP because it's Monday. But now that we've broke through that VWAP and we're underneath it, it's yet another level that we have to fight through to go back up. It's not to say that we can't do it. It's just one more thing that we've got to fight through. All right, so far today we have a missed daily pivot, MDP. Markets generally hit their pivots. The statistic is about 80% of the time. So the fact that we haven't hit it yet kind of implies that it's on the table that we should hit it. But we tried 3 times and the market gave up after it couldn't hit it. It's like the 1, 2, 3 fail setup. Either way, any move to the upside, we've got to get through that floor pivot. Once we do, we have the weekly floor pivot. The ES doesn't generally spend a lot of time underneath that weekly pivot. So it is the expectation that we'll get above it at some point this week. It's still going to depend on, trader sentiment. 59.43 is a level we've got to get through and then preferably get completely outside of that channel. So we're looking at, 59.70-ish. A good way to think of it is we've got to get completely outside of Friday's range. Friday is the really big bar that we've got to fight. All right, we talked about this air pocket of risk last week. And the idea was that if we broke structure, we would likely fall through it really fast because there wasn't much there that could help us out. Well, we hit something and maybe it lines up with that point of control. I'm not really interested in that too much, but somebody pointed it out to me. It's worth mentioning. The thing is, we ran through that level going up. If that level existed at the time and we ran right through it like it wasn't even there. So maybe it's more of a coincidence than anything else that we happen to have stopped in that zone or in that area last week. I don't know. We hit something because we can see the collected volume. That's Friday's volume, right? That's not from the overnight Sunday and into this morning. That's from Friday. So when we dropped down into that level Friday, they were there and they defended that level midway through this shallow zone. So something was there. And if you look around, I'm sure we'll find a lot of pivot points, a lot of structure there. It just, to me, didn't seem like anything to do with the volume profile or the TPO profile. This morning, we've just got a very narrow structure. There's not a lot here to work with yet. And any move to the upside has to deal with last week's levels. 60.25-ish would be the point of control for last week. No real help or assistance to that. And if we continue moving to the downside, we still have this point of control down here that I would be interested in focusing on, 57.50. I know that sounds pretty wild, but there it is. Volume sitting at 100. That's it's a good number to see, but we're not coming up short when think about investor participation this morning, and there's a notable lack of hedging. So they're in it, they're playing it, we're just not going anywhere, right? Think about all of that volume, and we've done nothing. We're basically flat on the day. It's a lot of work to put in for no return. All right, we talked about the 10-day, 30-minute volume profile last week in this point of control that's up here. There's no way that that thing is going to move anytime soon. Even dropping down to the level where we are now, if we were going to build this out, we would lose all of this volume by Wednesday. So it would be unlikely that we could compete with all of that where we are now without staying here for a week. At least we stayed up there last week and moved that point of control up there. It's going to take another week of us staying sideways somewhere. Maybe we go sideways into NVIDIA still, which is the base case argument as of Friday's close, but they're hammering it pretty hard this morning in the news, like they want to sour people's perceptions of NVIDIA's earnings. Maybe they're just looking, sell the rumor, buy the news kind of thing. We have a new VPOC from Friday. It's all that structure that we built Friday afternoon. So if we make some moves to the downside and we want to consider breaking out of Friday's low, we've got to get through this VPOC, which is really close to the COG line. 58.92 COG line, 58.91 VPOC. Either way, I mean, it's really close. 2 ticks. I wouldn't negotiate with it. I wouldn't fight with it. So get through the COG line and then challenge yesterday's low, and then expect liquidity down there, right? Liquidity resides on the other side of the pivot. If we're going to have a really good bear trap, where we come down and we bounce and we come back and bounce again, get that double bottom bear trap, then it needs to go lower than the previous low. Bears aren't going to get trapped. They're not going to get in it if we can't break that low. So we need to go lower than the previous low, convince the bears that we're really breaking down, and then shoot it back up in the other direction. If we just come down and we tag it equally, then to me, that sets us up for more of a cup and handle situation. So we talked about this week's range on Friday, and it really didn't seem like it was much different than last week's range. But on Friday, it wasn't locked yet. We needed the whole day to play out, and then we would come in on Monday and look at it again. So here we are, we're back looking at it again, and we can see that this week's range is now a little bit wider than last week's range. Well, there's only 2 things that are built into this range. One is how many days are we looking at? Because some weeks, we have a 4-day week or we have a short day, so then it's 4.5. Well, last week was a 5-day week. This week is a 5-day week. So that didn't change. The only other thing that is built in here is volatility. If the volatility is greater this week than it was last week, then the range will be wider. The thing about a narrow week is things like FOMC, NVIDIA earnings, PPI, CPI, these things can be volatility suppressing. They can hold volatility down while a market goes sideways, waiting on those events to happen. So if everybody is expecting to wait on NVIDIA's earnings for 3 days, like we have for the last couple of earnings, this should have stayed as narrow as Friday, or even just a little bit more narrow. And it's not, it's bigger. I don't know what to do with that yet. Just pointing it out. It is a little bit wider. There is more volatility being priced in, as if the market was already not anticipating waiting for NVIDIA's earnings. Well, underneath the 10-day, but not exaggerated. So at 0.63%, we could easily expand another 0.63%, and we still wouldn't be oversold, overextended. We wouldn't be looking for any sort of mean reversion at that point. We've got plenty of move that we could take to the downside before we would start to consider oversold or having gone too far. So at this point, it's just a little bit of a pullback, and we've already started working our way back the other direction. We're still above the 10-week, more than 1%. It's on the decline. We're coming back to get a really nice retest. And that kind of all makes sense. You know, if we're looking for this end of year Santa Claus rally, CTAs and vol funds and everybody all piling in and running it long into the end of the year, then it would make sense to get one more test of that 10. Coming back to the 10 is like a reset. It puts us back into the center of the court, and we can make a 3.5%, 4% move from the 10, and it wouldn't put us into extreme levels of, we wouldn't be overbought. We wouldn't be unstable. It'd just be a good, nice, healthy run. Kind of like what we got back here at the end of October, where we came back to the 10 and we made a 4% run off of it. So at this point, it's not unhealthy. It's not negative. It's not extreme. We made some big moves and we need to digest it a little bit. So either a correction in time, a correction in price, or a little bit of both. Doesn't hurt. It is worth noting, this is the high from the run, and this is the low from the run. 58.88. It's your half back level. We tested it last week. We came back above it. We're holding it. We kind of need to hold that line. Now, going underneath, it's not a big deal. Dipping down, coming back up. We can even close underneath that line as long as we now don't close underneath that line. We need to stay above that wick. So we can dip below that wick, put in a new low, but we need to close above that line. If we don't, it puts this line on the table. Now the ES, the SPY, SPX, it is notorious for developing crystal clear patterns that everybody can see and then completely ignoring the follow through of that pattern and doing whatever the hell it wants. So just kind of keep that in mind. Out of all the markets out there, this one has a history of giving you crystal clear, textbook perfect signals and then doing the complete opposite. It's on the line. We've got a line in the sand it needs to stay above, a line in the sand it needs to close above. And we've got destinations and targets if it doesn't. Bitcoin ETF down 1%, but it's still up 5% over the last 5 days. 2 of them back to back. Semiconductors, SMH, down 0.5%. And looking at things that are up, VIX is up 12.5% over the last 5 days, 2.5% this morning. Gold miners, uranium, nat gas, the Magnificent Seven or the FANGs, China ADRs, the KWEB constituents. Biotech. And if we give it a little time, maybe XLE and emerging markets. They're not quite there yet, but they're pushing in the right direction. %11 of the S&P is up more than 0.5%. And 19% of the NASDAQ is up at least 0.5%. See a lot of semiconductors in there this morning. Intel, AMD, Qualcomm. So we're getting some movers. This likely isn't enough, right? We're going to need something more than that. But we got to start somewhere, so it's better than nothing. So this is the NASDAQ 100 pre-market. You can see Tesla with that 6.5% move. AMD 1 3/4. But a lot of these, they're just not doing anything. Apple 1/4, Microsoft not even 1/4. Amazon, yeah, 0.5%. So it's not necessarily really positive or negative out there. There's no leadership, there's no direction, and that's what we're missing this morning. So keep your eye on the news. Look to see the market finally make a decision. There's more talks about unwinding that rate cut that has already been priced in for December. That could certainly shake things up. Otherwise, we're stuck watching what the Fed has to say and waiting on NVIDIA earnings. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.